Hi, Tiffany here. In this video, I'm going to go over whether a 401k is taxable in Canada. As a cross-border financial advisor, I've spoken to countless clients who have 401ks in Canada. I strongly recommend you speak to a cross-border accountant before you make any decisions. Nobody wants to get a large tax bill they weren't expecting. That's where proper tax and cross-border financial planning come in. Stay to the end of the video to find out if your 401k contributions are deductible in Canada and how to avoid double taxation. I'm Tiffany Woodfield, a cross-border financial advisor and co-founder of Swan Wealth Management. Over the years, I've seen how much stress the question of taxes can cause dual citizens. Whether you've moved just to start your next adventure or to pursue a career opportunity, the last thing you want is to be stressing about the IRS. Is a 401k taxable in Canada? The short answer is yes, but the long answer is maybe. A regular 401k is a U.S. account that is set up using money earned in the U.S. The IRS has the first right to tax that income when you take the money out, and Canada has the second right to tax. The tax you paid in the U.S. may be used as a foreign tax credit on your Canadian return. This reduces the tax you owe in Canada on that same income and helps you avoid double taxation. When you live in Canada and take money from your 401k, the U.S. will withhold taxes to pay your U.S. tax liability. However, the amount that you actually pay depends on whether you're a U.S. citizen or green card holder or a non-U.S. person. As a U.S. person, your final 401k rate will be based on your graduated tax rate in the U.S. As a Canadian resident, non-U.S. person, your withholding tax rate will be based on whether you took periodic payments or if you took a lump sum payment. The withholding tax rate for lump sum payments is generally 30%. For periodic payments, that may be reduced to 15% under the Canada and U.S. Income Tax Treaty. So how do you avoid double taxation as a Canadian resident? As a Canadian resident, you have to report your worldwide income to Canada. You can use the tax paid to the U.S. as a foreign tax credit on your Canadian return. This is where it's particularly important to work with a cross-border accountant who understands the complexities of the foreign tax credits. Next, does it make sense to leave your 401k in the U.S. when you move to Canada? Let's say you worked your entire career in the U.S. and built up a large 401k. It doesn't seem to make sense to lose a lot of your retirement investments by liquidating your 401k. So you have two options. First, you could leave your 401k in the US. Second, you could find a dual licensed financial advisor who could manage your 401k for you while you're living in Canada. The problem with option number one, although it may seem simple, is that the brokerage firms in the US are usually not allowed to hold non-resident accounts. What this means is that you may get a letter saying you have 30 to 60 days to either find another advisor or liquidate your account. If you work with a financial advisor who's dual licensed, you have the option of rolling your 401k into an IRA and have it managed according to your needs and risk profile. Also, if you decided to move back to the US, you could still have it actively managed. Next, are your 401k contributions deductible in Canada? There are two situations where they may be deductible. First, if you come to Canada for 5 years or less and were already contributing to a company 401k plan before coming to Canada, then you may be able to use the 401k deduction to offset income for work completed in Canada. The other option is if you commute to work daily in the US and are paid by a US employer and are taxed in the US, then 401k deductions are permitted during the period of service. If you find this information helpful and want to learn more about whether IRA withdrawals are taxable, please go to the Swan Wealth blog. Finally, if you're planning a move across the border and you have assets you want to protect, I recommend to schedule a call with a cross-border advisor well in advance. Often, the most costly mistakes happen when you don't plan ahead. You can schedule a call with a Swan Wealth cross-border expert. Go to our website at swanwealthcoaching.com. Thanks so much for watching, and we'll see you in the next video.